So yesterday was an ugly day in the stock market. There's so many stocks yesterday down a huge amount, and without doubt there was a lot of investors exiting the stock market at massive amounts of losses. A lot of these stocks are down huge amounts, whether it be big tech down 20, 30, even some of the likes of them, PayPal, Facebook, down 50%, and even some of the small caps, the growth stocks, they are down even more than that, and they were still selling on them stocks that are down a huge amount. And without doubt, with them being sold off yesterday, there was a lot of investors taking big massive losses on them stocks, because a lot of them stocks are at prices they were at in pre-CV times, 2020, 2019. Even though these stocks are at historical lows, historical low valuations, investors were still deciding to sell their stocks at a massive loss yesterday. And yesterday for me was a day where I don't know if I was just a bit angry or I was just a bit disappointed in what was going on in the stock market, to see so many investors give up on the stock market right now. A stock market which is heading into crash mode of 2022. A lot of investors are choosing to give up on the stock market, and today I wanted to make a video about that, because yesterday I was a bit frustrated with what's going on. I don't know if I was frustrated or disappointed, and we'll go on about that today, but yeah, it was an ugly day for the stock market. And getting on to just what I was saying there, yesterday was clear that so many investors gave up. There was so much exiting of the stock market at historical low valuations, and the big thing that was frustrating for me to see, and why I was so angry and disappointed, is that so many investors now are doing the opposite of what you've been told. It's the opposite of, why I created the YouTube channel, 5 years ago. A lot of the principles that, I try and put in, and, think about long term, doesn't matter about short term macro events don't matter. The best time to be buying stock is when they're on dip, not when they're going on uptrend. And crashes are your friends. You want to be buying new crashes. Crashes where you make most of your money. When you go on the bull runs, that's where you want to be selling your stocks. That's where you want to be trimming stocks, not the other way around. You don't want to be going on bull runs, hitting 52 highs, and then buying your investments, buying your stocks. And then when it gets to 52 lows, then you don't want to be selling out your investments. You don't want to be doing the opposite. Every successful investor in the stock market tells you the ways you make money is buy great companies, you hold them for the long term, and if anything happens, like dips in the stock market, they are normally better buying opportunities. That's where you can make more money. And that's what so many great investors try and tell you. Personally for me, that's the message that I've tried to get across on the YouTube for the last kind of 5 years. And just to see so many people, investors, just go against that in the last 24 hours was just unbelievable. And it's the same as, from my point of view, making these videos, I've seen it in the comment section. Personally for me, especially in yesterday's video, I just saw how much negativity was out there. I saw the amount of people that were giving up on the stock market, the amount of people that just saw this dip and went, that's it, I'm out of here, and the amount of people that are in fear of this dip right now, not going, you know what, I'm absolutely loving buying these stocks at historical low valuations. More people saying, I'm selling this stock at historical low valuations. And it was just disappointing to see so many people that the negativity has got to them, and not seeing what them buying opportunities are out there for the next few years, and the money to be made on these opportunities in the next few years. And retail investors have been have totally left the scene. I've seen it personally. Retail investors, what do retail investors normally do? Well, one of the big things is they go to YouTube. If you go on any YouTube content creator for the stock market right now, what's happened to the views? They are decimated. I can tell you from my point of view, from the 52-week highs where we went on an absolute crazy run, February 2021, and when we go to where we're at right now, with stocks at the lowest valuations, where you want to be buying stocks at the lowest valuations they've ever been at, the buying opportunities, what's happened? Retail investors have left. Personally for me, my views on YouTube have halved from February 2021 down to where they are right now. And that's retail investors giving up, not investing into stocks anymore. Everyone was interested at 52-week highs, now we're at 52-week lows. No one's interested in the amazing deals that are out there right now, which is just so disappointing to see. And it's not just my channel, you can go on a lot of other stock market YouTube channels. Whoever you like to watch, you'll be able to see a lot of their view count from February 2021 to where we're at right now. it's unbelievable. And there's plenty of metrics you can use. I've seen people, just how active people generally are. There's a lot of retail investors moving away from investing at the moment. And what tops it off, another thing that yesterday as well made me very angry and disappointed was YouTube itself. I've seen over the last 24 months just a massive explosion in the YouTube scene. New content creators coming onto the YouTube scene, and we've been in a massive bull run, and everything through that time frame, you've seen every single YouTuber that's come onto this time frame going, yeah, buy the dip, hold for the long term. If there was ever to be a dip, you buy the dip, you keep buying the dip, you're averaging. And now we've gone through the full cycle, and now we're back into a stock market crash. You've seen either YouTubers that were doing all that suddenly gone very quiet, not making any content, or you've had YouTubers that are coming out and going, you know what I think I can do? I think I'm better than the likes of Warren Buffett and Charlie Munger. You know what I think I can do? I can time the market. I can sell out here, and I'm going to pick the bottom off perfectly, and I'm going to make loads of money. And for all that's been said, all the great investors that say don't time the market, just buy great companies and hold them, all these, what you thought was understood out there, which is you buy and hold, you don't time the market, has just gone out the window in a bear market territory. And so many people have gone now to being day traders and not long-term investors, and it's just unbelievable to see that we've had all this talk about if we ever have a dip, the benefits of the dip, you buy the dip and it'll be okay in the long term. And just over a few months period of going through this market, you've seen so many people just change their investing philosophy in a big massive dip. And I guess that's what happens. Fear is the most powerful emotion when investing. Fear is the emotion that will make you make bad decisions, and especially when you're talking about investments, you're definitely going to make bad investment decisions with fear. And that's what looks like it's happening. No one now is kind of thinking about, okay, macro. I put there's a post on Instagram the other day. If you're not following the Instagram, it's JK Investing. And when you zoom out and look at the S&P 500, all you see is an uptrend. It looks like a nice, easy path to going up. When you actually get into that, when you get a lot more closer, there's so many little dips in there, little periods of time where it's a little bit horrible, it's a little bit tough. But what has that shown? All of them dips were really good buying opportunities, and there's always going to be these little macro events that are going to be end of the world. The stock market's going to be horrible for the next few years, or the stock market is never going to be the same again. The stock market isn't going to be how you remembered it, how you remembered it was. All the time you hear these little macro events are going to change how things are going to be. It's going to be a horrible stock market for the next 5 years. And all the time it recovers. And right now, there's certainly a lot of macro events going on, and it's causing a lot of pressure on the stock market. It's sending the stock market down. But will this last forever? That's the $1 million question. No, it won't. It won't last forever. As long as companies carry on growing their financials, growing profit, growing revenue, your companies will be okay. And yeah, I guess that kind of comes towards negativity. There's just so much negativity out there. There's so much negativity in the media right now. There's people's, now we're at 52 close and we're so sold off. It's everywhere you go, you just see a lot of investors saying, oh yeah, it's just going to go lower. It's just going to go lower. That's all you're hearing. It's just going to be more months of pain, or this stock is going to go from this price down to this price. There's just so much negativity out there. What you see now is investors going, you know what, this stock's gone from $70 down to $20, $15. I'm not going to buy that because it's going to go lower. I'm going to wait until it goes to $10. Now, it might go down to $10. You might do okay. There's a chance that could happen. But what happens if it doesn't? What happens if this is the lows? What happens, worst case scenario, what happens if you do buy it at $15 and it does go down to $10? Well, as long as it's a great company and you bought at $15, more than likely, if that stock used to be $70, I don't know if it will go back to $70. I'm just kind of using a bit of a general thing here, but imagine if you bought at $15 and it goes to $30, you're still going to make good money. If it goes to $45, you're still going to make good money. If it goes to $60, you're still going to make good money. So if you get $10, you make good money. But if you buy it $10 and you buy it $15, there is no difference about that if you buy a great company. And the thing is, if you do buy $15, the magic thing you can do is you can average down. You can average down on a position and you get your average down to $14, $13. That's what you can do as a long-term investor. That's what you can do when you dollar cost average into a position. That's when you want to focus on. And just to finish off with is that I think the most frustrating thing is that if we go through the full stock market cycle of where we used to be, so if we go back to 2019, so we have a good stock market year in 2019, we'll go into 2020, same again, we start off going pretty strong. What happens? CV happens, the world shuts down, pandemic, a major pandemic. I mean, we've not had a major pandemic for so many years. You know, we have wars nearly every single year. Pandemics very rare, and the thing with this pandemic is it's very unknown. We don't know how long is this going to shut the economy down for, how serious is it going to be. So much unknown there, a lot worse than what it is right now for sure. And what happened? Stocks tanked. You had, my portfolio, I can't remember how much it was down, but it was down 30, 40, 50%. A lot of positions I was down absolutely huge on within a couple of weeks time period. It was a fast dip and everything sunk down. Now in that dip, there was no point where I went, oh crap, you know what? This is going to get worse. I'm just going to sell my positions and I'll see where we're at in a year's time. You know what happened in a year's time? We were at 52-week highs, higher than where we were pre-crash, pre-CV. So if I tried to time the market, I would have massively done poorly. And I didn't time the market. Instead, you know what I did? I was averaging into a lot of these positions. And a lot of people now before this current crash would have said, oh, I'd love to go back to the CV times and buy the dip. And now we're having a stock market crash, very much like the CV times. People aren't buying. And now we have that same opportunity out there. And what happened in that opportunity of that CV dip? Well, there was times where I was buying positions and I was still going down on positions, and every day it was still going a little bit lower. But I just thought, okay, I'm looking where this business is going to be in the next few years, where it's going to be in the long term. In the long term, I think everything will be okay from the CV situation far worse than where we're at right now, considering that a lot of these stocks are now priced at lower valuations than the CV times. And what happened in the end? What happened from that mentality? Well, if we look at a lot of the stocks that I was buying, I made a ton of money buying in that dip. Absolute ton of money. Look at Greggs. Greggs from buying in that dip had 3-4 months of pain. What happened? The stock was up over 100%. I sold half my position out at 110% gain. Unbelievable. Hollywood Bowl. Didn't sell any, still hold my shares, but have a great average. Jet2, sold some shares off. Over 100%. National Express, what happened? Bought some shares, what did I do? Sell it off for some shares off for 100% gain. Boohoo, what did I do? I sold some of my shares off for 50, 60, 70% gain. Barclays, sold it off for a 50% gain. Wynn Resorts, sold it off for an 85% gain. CBRE Group, sold it off for a 40, 50% gain. Revolve, what happened? Sold it out for another 100% gain. InMode, what happened? Same again, went up 300%. Pinterest, what happened to that one? Went up 300%. What did I do? Sold half of my position off on Pinterest. And there's other stocks that you can look at. If you look at before we've just entered a new crash, the likes of Facebook, the likes of Visa, the likes of Microsoft, Disney. There's plenty of companies out there that you look at what I personally did last time in a stock market crash. Did I panic? No. I just bought the dip, I held it, and I got massive rewards. Over the last 2 years, I made a ton of money on the stock market. And that's because I took advantage of the dips. And coming into this time round now, sure, the dip is a little bit different from last time. Last time it was such a fast dip, and then it did a fast recovery. What's happening this time? Well, it's not a fast dip. It's as painful, but it's probably a little more painful. This might be what is affecting investors more and more, is because last time we had a dip in 2020 or the CV time, it was so fast, but then it was over quick. Whereas this one is a little bit of a chip away at you. This has been going on for 6-12 months now, where you've just had stocks go down a little, just down a little more, and rather than just being a very quick kind of 1 month, 2 month of pain, this has kind of been 6-12 months of just chipping away slowly, slow percentages. And every so often as well with this one, you've had a little bounce and you think, oh, that's all right now. And then it carries on going down. And maybe that's why it's affecting investors a little bit more, because it's a slow, painful one rather than this kind of quick flush out. So that might be another reason why it's been so many people this time round, rather than realising the benefits of long-term investing, don't time the market. Look what happened on the last stock market crash we had 2 years ago. Maybe because it's that sort of dip, that's maybe why it's affecting people so much, but it makes no difference in the long term if it's a fast dip or a little dip. So yeah, I don't know if that's it, but it's just, yeah, overall it's just I don't know if it was just a bit of anger or disappointing just to see everything that you kind of, so many of the evidence from 2 years ago, the benefits of buying on the dip has just totally gone out the window. And now just seeing the last 2 years and everyone going, yeah, I'd love a dip again. If it was a dip, I'd buy the dip, or, the dips are your friend, that's when you make you more money, averaging in. And now that we've had it, people have just given up, gone, no, actually, you know what, I'm going to sell out 52 close. And it is a little bit frustrating, and I'm a bit disappointed to see, especially for me. I've always been here. I've not changed my investing philosophy. For the last 5 years, I've been on YouTube. I just buy and hold great companies, and in fact, if the dip, I really like that I can buy more shares in that at a cheaper value. So I guess it kind of leads me to like where I'm not really, for me, I'm not doing anything. I'm not changing anything. I'm here, still here, buying stocks. I will always stay here, buying stocks, averaging in, taking advantage of the dips, and holding for the long term. That's what I will be doing. I will not be changing my game plan suddenly because we've gone into a dip. I won't be trying to time the market. I will just be buying great companies and holding them for the long term, because that is what I've had the most success doing, and I will continue to do that going forward. And I know personally for me that in the next few years, a lot of these companies that I buy, 90% of these companies that I'm buying right now will do absolutely amazing. And once again, it will be a repeat of 2020, 2018, and everything will do very well. So I hope you enjoyed the video. For you guys that, I think there's a few of you guys out there still holding in there. And yeah, I hope you enjoyed it, and I'll catch you in a bit.